Wednesday, October 4th, market analysis. Stan Ehrlich, good morning. 9:54 California time, and slightly after the middle of the trading day, New York Stock Exchange. The head and shoulder top formation, and I always start out with stock market indexes, typically the S&P 500, and I'm going to do the same this morning. The December E-mini is daily data is on your screen. The head and shoulder top, which I've been talking about now for approximately 2 months before the last shoulder high developed, which was September 1st, is doing very well. My minimum downside objective on the E-mini is 4,000. That is approximately 50% retracement of the October lows to the highs that we saw July 27th, I believe, which had a bearish ER sell signal. We also had on October 14th, but you don't see it on this futures contract, it wasn't liquid at the time, a bullish engulfing buy signal October 13th of 22. So we've caught the bottom and the top so far of the major swings in the last year plus. Actually, we had a few sell signals at the top, January 3rd or 4th of 2022, the beginning of the bear market. For now, we are oversold. We've been oversold basically for a couple of weeks. It's not unusual to get oversold on a downside breakout, but a little unusual to see it stay that way on the way down. And our way down is almost to our minimum downside objective of 4,000. This morning, we managed to come down to 42.33 or 42.34 and change. That is a little more than 50% toward my objective from the initial breakout point, which was only on September 21st, and the breakout was at 43.88. So I was forecasting basically 388 points lower, which again, over half of it has come true. Now, the oversold condition provides a reason for the market to rally. I haven't got any major reason other than that. I do not expect this rally, which is, a couple of points higher on the day at the moment, to go very far for very long. And I'm quoting the spider up to 1.99 literally at the moment. So maybe we're going to challenge the highs in the ballpark of yesterday's high and maybe a slight bit higher during the next couple of days to eliminate the oversold condition. And then by today's Wednesday already, maybe by the end of this week or the beginning of next week, start to make new lows for the whole trend again. Now, remember, I have the October lows in mind. So this month, I'm very much looking for a buy signal or reasons to get long again, to get very bullish again, up to and above previous highs of July 27th, the top of the market so far. And in some cases, to make new historic highs. And in some other cases, they have extremely important major long-term bullish breakouts like the Russell 2000. So maybe it's going to bounce a little bit more for a couple of days. I don't think it's going to be very much. My guess has been the December E-mini futures between 43.36 and I'm going to say, it's rough to say, it's not very clear, 43.65. I don't think it's going to hit the neckline. I certainly do not want it to close above that red line right there. That is a violation of the rules of the head and shoulder formation, which is working so damn well so far, and change things. So you've got a little zone, if you will, to consider selling short in the next hours or a few days. Next chart is the spider daily data. I have the same story here, but we did not make a new low where we did on the E-mini because it was overnight, and that's the E-mini again. So the spider didn't quite do the job this morning and is an inside doji so far, but still oversold. Not at the current quote oversold, but at the low of the day oversold. So I'm thinking a little bit more of a rally. There's a fairly decent spot for it to stop, and it already has stopped there. I repeat, it's already stopped there, but that's my first resistance spot. It might be 427.5. I really can't come up with anything particularly great. Maybe at the most 432. So there's a little bit more of a rally, maybe, but I'm watching for it to turn back down again, and we'll try to scream bloody murder when I see it. DIA, basically the same story. We did make a lower low. There's no reason for this low today in all of the indexes I'm looking at so far for it to hold any length of time. It's mostly the oversold condition. Look at how much further down toward the minimum downside objective on the DIA we are relative to the other indexes. We are probably 70, 80% toward the downside objective of 324 already, today's lows. That tells me maybe the objective is too close and it could drop off even a little bit more, which is not abnormal at all. I said minimum objective. Next chart, QQQ hasn't even broken out yet. Yesterday's low was right smack dab on the neckline of the head and shoulder top. So we're fiddling around a little longer than one would normally expect. But this does happen occasionally. The golden rule here is you can't go up too much and you can't go up for a very long period of time. So if there is going to be a little rally, I'm looking at maybe a gap closure at 364. I hope not. I don't think we're going to get that much strength, but it's not out of the question. When that gap is closed, it better turn around and come back down again if it is closed in the first place. It already tried twice. I'm looking for a downside breakout very soon on Qs and, at the end of a little rally and everything else at the same time. And down we go. Russell 2000. Way down the scale here, like the DIA, probably 80% of the downside objective has been already accomplished. 166 is my minimum downside objective. And today's low is already 169. So the original breakout was all across the board, pretty much the same day, give or take a day, maybe sometimes 920. And we have come down quite a bit. We even tried to close the gap on a rally a few days ago and crashed immediately after 50%, let's say, of the gap was closed and then could put straight down. And NASDAQ futures, like the Qs, tested the neckline today, made it into minor new low ground, but the neckline slants downward. So that's all it was doing, was touching the line, that being the neckline. When and if, and I do expect it to happen very soon, we break the neckline, closing below the red line, that would be closing below today's lows. Then the downside objective should be about 13,300. And I'm looking at a 2-minute chart on a spider, very short-term resistance. Now let's go look at that October low chart. Remember, we have a 90% of the time track record for October containing a low of some significance, sometimes hugely important, like last year, October 13th, over the last 30 years. 90% of the time, there's been a great buying opportunity in October. Sometimes it doesn't stick out like a sore thumb. Sometimes it does, like last October. And the year before was great. And the year before was very, very close. That was October 30th. So it was, still in October. What am I saying? So October 3rd, and it stuck out like a sore thumb. This didn't last long, but it was still a great opportunity. October 29th, and then it made new lows after that. This did not, October 25th of 2017, stick out like a sore thumb. Here's one of my 3 bad years, so to speak. November 30th is immediately after October, and that's when the low was slightly late. And then the year before that, September 29th, and I'll talk about the others sometime else. Let's go to the MES, and of course it's the S&P micro E-mini. Everything's the same. Oversold condition, trying to rally. On the right side is a 1-minute chart. We're messing around here for the last hour or two, having a little trouble maintaining momentum. We'll see if it starts to roll over again. I'm going to go to the futures contracts now. And my first one in the upper left starts out with the E-mini, no changes, but you get a different perspective. This zone that we have dropped into, the red one, is a significantly historical support level range, not particularly skinny. but it goes all the way down to about 4,150. And you can see those lows back here and some highs, some significant evidence that approximately that price level has stopped rallies or breaks in the past. So it's awful close to my minimum objective, the 4,100 thing. So we'll see what happens. Next chart's going to be the December soybean oil. So I'm out of sequence here. So you have to bear with me. Sorry. We bought with an ER3 order from the bullish engulfing on Monday, this market at 56.57, because that's where my strategy ER signals said to do it automatically. We have a tiny or scratch profit at the moment, nothing to write home about, certainly. And the next thing is to start and continuing to rally and close, hopefully, as strong as possible today and in the next day or two, new highs for the week. That would be great. That'd be pretty much perfect. I didn't catch the low of the break super accurately, but I just don't want it to make lower lows. Then I think I'm in jeopardy. My stop is 55.55. Next, soybean meal. Oversold yesterday, starting to bounce a little bit today, and you'll notice it closed on a little dotted line yesterday. It didn't really close below it any discernible amount, and it got oversold. So here we are steady again, trying to maintain some steadiness after a little rally that already got to my minor first objective of 378. I expect this to break down and turn bearish and start to have a sizable bear market move. I hate to say it, but this looks like a very wide head and shoulder top. There's a variety of them around recently. By the way, I was on Traders Workshop yesterday with Tom Schneider, and we were talking about these head and shoulder patterns for several minutes, actually. It's my favorite. The shoulder here is very wide and flat. It's, let's say, August, September, October of 22. Then the head of the formation is basically this little double top, but you could incorporate into the head pretty much everything from December 9th, all the way over to April 18th, this rolling top thing. Then we bottomed out with a little double and came up to a rolling top again, which kind of started on June 22 and ended on August 28th. So having seen new lows since June and almost new lows for many months going back to November of last year, I think that's about to happen. It will look like a breakout of a head and shoulder formation, which is very wide and broad. And the downside objective is going to be something in the area of 250. Next chart. Live cattle. I can't get this figured out. This is a weekly chart on live cattle. I've showed you the cycle before. I guess I'll do it again real quick. This is pretty interesting for people who are not necessarily cyclically oriented. I hope this comes up. It should. Otherwise, you got a little problem I'll fix, but for that's tomorrow. And here we are. The menus just popped up, and this is good. Okay. You pick the EC forecaster I just loaded, version 1.06. I'm going to select this as the anchor point for the cycle, that low, and it plops a little yellow line under the price level. So if I'd clicked on a high, the line would have been going up above the high. Now, what about the spacing for the theoretical cycle? I'm going to pick this next dominant low right here. Look what we get. Okay, this is a cycle low series. The next low is supposedly October 6th. It is not a small one whatsoever. Its length is 182 weeks. It's a weekly chart, 182 bars. One of the lows was back around April of 06, and then in the neighborhood of October of 09. And then I'm putting the line in the middle of the green bottoms. And let's just erase the highs for the moment because we are getting a little confused. Okay, and then that low. And then I picked that one on purpose, and it tells us we may have just had a cycle low, or we're going to have a chance for a short period of time to have it still. But after we're out of this green zone, or even before that, we're supposed to go a lot higher. That does not look good to me, and I like my steak. Live cattle futures, weekly chart, next chart. Let's just unload this real quick so I don't have any other problems. Thank you, and good. Hogs, holding at support at the bottom of the little red zone. Trying to have a bullish engulfing, not quite. Not quite oversold. That's not super convincing that this is going to hold for very long. Your resistance area and the overall downtrend for many months is the prevailing trend. Resistance stopped it several times since July. We've seen new lows since July. That's indicative of a bear market in general. I don't expect the support level to hold for very long. Yeah, it might bounce up to 71.5, maybe even up to 73.5. But real soon here, I think that red zone is going to go bye-bye, and we're going to be trading underneath this support level, which is okay at the moment, but doesn't look that good. Corn, resistance, stopping it cold in its tracks in the last few days, almost at the exact same price. You don't see that very often. Very, very close on 1, 2, 3, 4, 5. Today's the 6th day in a row where the highs are, you could count them on one hand, so to speak. Very close. Outside trading range today could end up as a bearish engulfing and start the next wave down, which I think is about to happen. So I could give that as the excuse, so to speak. We're nowhere near overbought or oversold. I can't say anything but bear trend and resistance is stopping it so far. Next chart, wheat has gotten a little oversold, did have a little bounce yesterday and the day before slightly, did touch a little tiny bit of resistance here. It is awfully minor. Any good rally probably will get up to about 18, 618, 19, 20, but I don't know that it's got the strength to do that. I can't help but be bearish. I don't see any major buy signals, just the oversold condition, which wasn't bad. So, you know, I'm not getting a sell signal yet. Maybe a little bounce, but I'm definitely bearish. Next chart is coffee. I expect to see new lows by the end of the week. We almost have a new low close today. We're right about there. Resistance is now overhead instead of below us. And the rallies are beginning to fail again and again. Looking for a test of and maybe breaking 135 in the next few weeks. Next chart, sugar. Today's low, not necessarily an important level, but an interesting minor support level. The trend sure as heck is up. I can't say that today's low is an important low, significant low. I don't know. I'll just keep my mouth shut for a day or two. And next chart is NASDAQ. And it's testing like the Qs, like the other chart I showed you, the neckline, not breaking below it yet, and still maintaining a fairly firm near the high of the day trading price. And the S&P is still up 187. Let's quick look here at, yeah, I already did look at the indexes for you guys. So we're finished for the day. Thank you very much. Mañana.